Ladies and gentlemen, welcome to the Midday Market Monitor. Today, we are looking at stocks. Who would have believed, right? Freaking stocks again, eh? We don't change the theme on this show. You're not getting a good mix of content. It's just going to be more of the stock market, but hopefully with new news. That's the great thing about stock markets. They seem to continue to produce more and more news. Whether that's for the good or the bad, definitely keeps us entertained. The S&P 500 is down 0.18%, recovering from where we opened up today. NASDAQ, exact same thing, negative 0.18%. Let's look at the big losers and winners of the day. As you can see, Bitmine Immersion down 12%. We'll take a look here at Ethereum and Bitcoin as well. But once again, MicroStrategy, one of the Bitcoin names, practically the only Bitcoin name, down 10.7%. The interesting thing, and we'll take a look here at Bitcoin. Yes, Bitcoin is also falling, right? Down around 6.5%, 84,600. But MicroStrategy is really starting to fall. I mean, if we take a look here over the last, we can even go year to date if we want, or full year. Full year's down 60% on MicroStrategy. The chat is covering that a little bit, but right here, 60% on MicroStrategy. Bitcoin on the year only down roughly 13%. Okay. What's also interesting on MicroStrategy is the market cap. The market cap is now at $45 billion. They hold like 650,000 Bitcoin, which is roughly about $55 billion of book value. So you're essentially getting this company at much, much lower market to net asset value, or not market to net asset value, but the market net asset value of Bitcoin. Quite aggressive of a discount. BMNR, we're going to take a look because they obviously ended up showing off new holdings today, and we're seeing once again a very interesting thing start to pop up from BMNR and sort of a theme that's happening. But they are above market net asset value. They continue to hold up a premium. Now, if I go ahead and switch, we'll take a look at some other names here in a minute, and I can put the chat back up on the screen as well. BMNR has reached 3.73 million ETH tokens, okay? And cash had gone up an additional $82 million. Once again, we're now by far at the highest amount of cash that BMNR has ever held. So we went from whenever BMNR originally started acquiring ETH, the highest amount of cash that they had was 775 million. Then that reduced all the way down to like roughly, I think it was like 60 million. And now they've started to accumulate back up. So this crazy V in cash, and once again, adding an additional 82 million week over week. They added on top of that, though, their ETH, it was somewhere around, there we go, 96.8 thousand Ethereum tokens. So they've added more ETH and they've added more cash. Well, how does that work if you're not making any new money? Well, they had to dilute even more. The exact amount of dilution, very hard to sort of address, but with their stake in 8Co Holdings and Bitcoin as well, Bitcoin's, I think, only about a $15 million holding, with cash and everything, they still are actually above MNAV. So you're paying a premium for what they have, which is honestly good, knowing that there's other names like MicroStrategy and stuff that are falling below that. It is not, that cannot be said across the entire board. SBET, many of these names have fallen below 1 times MNAV, BMNR still holding above. That's assuming that their dilution has not been absolutely egregious, but they clearly are diluting if they are going to add on ETH and add on to their cash. But that could lead to a massive buying opportunity if that comes to it one day. Okay. Let's see what some of the other, let's say, high flyers are today. Chime up 6%, Elf Beauty up 4%, Unity up 4%, Reddit up 3.8%, continuing to climb. 224. Alibaba up 3.5%, Celsius up 3.3%, and Shark Ninja, who's been doing a ton of these new partnerships, has broken above $100 per share. In terms of the names on this list that I hold Shark Ninja, I hold Reddit, I hold Chime. But it's not like I'm some great investor. I'm also the same guy that's holding BMNR, and I've got a lot more BMNR than any of those names. So, cake on my face. Anyway, let's go ahead and hear from Tom Lee on some of his thoughts on the market in general and where we potentially might end the year out at. Now, obviously, people like the year end hasn't happened, but some of his expectations for Ethereum have obviously adjusted. A $12,000 ETH price by the end of this month seems a little out of the way whenever Ethereum is sitting at, sorry, I keep clicking that Grayscale ETH Trust, but down 8% to 2,740. We've got a near 4 or even closer to maybe even a 5x. I think actually closer to a 4x, but still long way to go to get to 12,000 ETH by the end of the month. Let's go ahead and listen to Tom Lee and his thoughts on the markets in general and how December might end up going.
At Fundstrat and Chief Investment Officer of Fundstrat Capital, as well as a CNBC contributor. He's a calm person that doesn't get too excited or worried. But this is not a portentous start for December, given what you were thinking. Although I remember last time you were on, Tom, you said good year-end action, but rocky in the near term. That was about 2 weeks ago, and we've certainly seen that. But you still bullish on crypto and stocks going into year-end?
I am. I think the biggest tailwind that's going to emerge in the next couple of weeks is around central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy. So I think people got cautious, but now have to performance chase. And then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Yep. So it's still all about the Fed for you, because I was thinking there is a time when a market can hit an inflection point where the reason the Fed is cutting becomes a problem for the market. That's what I thought. With the jobs and everything else, there might come a time where purely Fed cuts or the backdrop is that there is some weakness in the market, in the economy. You don't see that?
I mean, I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because, markets like visibility. But to me, the fact that claims have been behaving and the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I mean, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are driving and powering the market right now? That's the one thing that made me sit up and say, that's a little different.
Yeah, I think there was a bit of soul searching, Becky, in November, because we know leverage rose, and we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy. And I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around. And the Fed futures jumped, and it became clear they're definitely cutting again. And we got very little for that. With Bitcoin should be back at 100 if it really is totally dependent on Fed easing. And if it's a debasement trade, which people say it is, we didn't get much for now. Everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Yeah, I mean, Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks. So we're kind of emerging from that. That's 7 weeks in the rearview mirror. So maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one next time, Tom,
Yeah.
we don't. You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a target and a time. Don't. It's not good for your career. Don't do that. You're going to be wrong one of these times. But you don't care, do you? You've been right enough.
Well, I'm just looking at probabilities. But you're right. We've been wrong plenty of times, Joe. So I'm okay being wrong too.
Okay. I never have been, really. I don't think so. That would be a big shocker. It happens to all of us. How about Bitcoin? Would you think you'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah. In fact, I think it was looking good, like you said, over the weekend, and then we got a decline. Sorry. Maybe because the Bank of Japan looks hawkish.
Yeah.
But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to. And that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Tom, is there a point, though, Joe and I were talking about this in the last block, is there a point where a Fed that's too dovish scares the markets because they're worried about inflation?
Yes. The markets don't want the Fed to lose credibility. And the bond market will kind of protest if the Fed is too dovish. But I think when I look at Fed fund futures, especially implied inflation, the bond market's more dovish than the Fed. So it looks like the Fed is behind. And that's why I think cuts are necessary.
Are you in town? Where are you?
Yeah, it's pretty. I was just thinking.
I'm actually in Tokyo. Otherwise, I'd
No,
be visiting
but
with you
it's
in
magic.
person.
That's magic. Yeah, otherwise you'd be here. I was wondering.
Yeah.
It could be anywhere.
Looks pretty.
Yeah, it does. All right. Wow, no delay whatsoever. If you were like down the street on Zoom, there'd be a delay or something, but you're in Tokyo. That was great. All right, Tom Lee, thanks for the update.
He's a little joker, right? In terms of some of the things that he said, the rate cut probability still at 87.6% from the time this morning of whenever they had this conversation. Going forward, the markets have definitely recovered, as you saw on the screen. Nvidia was trading at about 175. We're now sitting at about 179 right now, up 1.6%. Sorry, that's on the day there. We did touch 180, a little bit below. Maybe we can end up getting back. I hate the 170s. Okay. Never want to see it again. It's funny, on the way up, like whenever we were buying in DeepSeek, like sub 100 felt gross. And then above that, 130 felt great. 150 was breaking a back above the DeepSeek dip. Everything past that felt great. Back then, these numbers would have seemed amazing. But now I'm over it. We've touched 212. I want to get back there. Okay. In terms of the Fed chance to cut, right now, FedWatch is holding that at 87.6%. And more interestingly, if people are a believer in call sheet markets and prediction markets in general being sort of a real chance to call the future, essentially, that there's a high probability that where the majority goes is where the decision will actually be made. 90% chance of a 25 basis point cut. 90. Okay. Well, actually, essentially 92, considering there is a very, very small chance. Actually, I think it's actually bottomed out at near zero. But a cut of more than 25 base points is an additional 2%, which is still a call for a cut. We will see. We will see. I have my my money, essentially. I'm not betting on a certain prediction rate or anything like this, but I am hopeful for my portfolio to continue to be green, is that I'm betting on continuous rate cuts. So that would include December 10th and even more into 2026. But for now, I am calling for a 25 base point cut. Put that in your weighting as you will. I mean, I wouldn't put too heavily, but the rest of the market is also saying so as well. Nebius is at $96 a share. Yes, it has run up. More interestingly, on some real news this time, Nebius got an additional price target update from a research that said we need to increase our price target, which was already very, very high, 184. They increased that to 211. This is a $96 stock. They could have stuck with their target and still looked extremely bullish, but they needed to increase it. 211. Great quarter. Great build-outs from the data centers that we're seeing. They are continuing to expand. It doesn't seem like anything is slowing down. And internal projections for 2026 is still looking like they are wanting to grow at an additional 700% on the top line. 700% revenue. Okay. Someone said app lovin'. Really quick, I made some comments about why I'm bullish on Meta. And, I'm not currently an app lovin' shareholder. I was previously, but the SEC probe and stuff like that had just, sort of scared me out of that position. And I can still play the industry without app lovin'. Okay. In no way, because I was saying that Meta is an AI play in advertising, that means that AppLovin is not. I'm fully aware, but so is the trade desk. AppLovin is also trying to do that, whether you're on the buy side or the sell side. I'm not saying that Meta is, a larger AI play than AppLovin or something like this. I was just talking purely about my Meta play, not saying that it was a better investment than other names. It's just currently that's what I'm seeing as an opportunity. It's too risky for me. Okay. Let's continue on here. Jonathan Price says, let's add to Vertiv to the community portfolio. Absolutely, Jonathan. Let me just make sure I screenshot that. Thank you, brother. I really appreciate that. Okay, there we go. Where is Vertiv today? Vertiv is flat on the day. And I'm a shareholder now. I think I probably have shares of it already in the community portfolio. But thanks again, Jonathan. That's seriously not needed, but very much appreciated. Okay. Really quick, because I was seeing this. We were just talking about prediction markets. I harp on this too much, but they were on 60 Minutes earlier for prediction markets. They continue to hype up and sort of publicize what these types of companies do. I wonder if that's going to lead to a larger increase in their popularity. I feel like the average person still doesn't even know about prediction markets. Maybe from the Trump election, that obviously popularized them a lot. But if you're not a sports gambler, I wonder if you're even paying attention to these markets at all. So, yeah. Okay. I wonder what the year-to-date performance of the community portfolio is. I don't have year-to-date. We started it in July. I do have that performance, however. All of the trades are tracked directly on Savvy Trader here. So we're actually down on the community portfolio. In the last 1 week, we're up about 10%. But yeah, this is all of the holdings that you guys have at one point since July have donated. Now, not like I'm holding a lot of these businesses. A lot of it's just fractional shares and stuff. So the actual dollar amount's very different than the performance, but we're just tracking the percent growth here. But SoFi is our biggest name, AMD second, SBET, Apple, UNH, Hood, PayPal, QXO, Abcelera, Lumen, BMNR. Pretty interesting. Yeah, we have minus the cash position. We have 112 names in this portfolio. So the community sucks. You know what I've realized with the community portfolio? I thought it was going to be a good gauge for how you guys invest, but it isn't. I don't think that that's true. What I think happens is, for example, a large percentage of my my holdings is Nvidia and Shopify and SoFi and all those types of names. But if someone had a community portfolio and I wanted to be like, oh, you know what? I want to put something in his portfolio that I think is going to do very well. Like, I'm not going to look to put something in that's going to compound at, 15%. I want to put something in that I think is going to triple. So you end up putting your most speculative names into the community portfolio, but they're speculative names. So they might be a small percentage of that portfolio, but this entire community portfolio is just built of speculative, high risk, high reward names, and then obviously I cover a lot of SoFi. So that's made up for a big portion. But honestly, I do think it's a little bit of a junk dump, a little bit, because people obviously see 10x potential. And there are some names like Nebius and these sort of ones that have been donated really, really early that were like tripled on. So it's a very fast mover. Yeah, people are throwing darts. Honestly, I think people are throwing darts in the community portfolio. But yeah. Junk like PayPal. I'm not saying it's all junk. A lot like Apple's in there. I think it's definitely not all junk. But there are definitely some names that we've been donated that I've never even heard of these companies. And if I didn't put a $1 billion market cap limit on the community fund, I've been told to invest in a couple of these businesses that are like 300 million, 400 million. Like, those companies usually don't do great. No one's donating to add Microsoft. Exactly. They want their new speculative name. So then if they do super well, I've definitely called some people out and just been like, hey, this guy ended up saying this. It's tripled, it's done super well. Thank you so much. But yeah. Okay. Let's continue. So, yeah, like a lot of quantum and stuff like that in the fund. I just don't even think that's going to do well. But people also want to prove me wrong. And I'm not going to, if it's a US company and it's over $1 billion, I will buy it. And like, I'm actually buying them. Like, I'm not, I'll balance out the risk. Let's add more Visa. Jonathan, thank you so much, brother. That's hilarious. I was just talking about how I probably need to add more Visa and Microsoft. Buy grab. I did end up buying a decent percent. I don't think we put it in the community fund, but I bought something like $1,000 worth of grab for Dookie Pie, who ended up donating a ton. So something like that. Okay, let's go ahead and take a look at Dan Ives really quickly. They have adjusted the Ives AI 30. This is their fund that is still owned by Wedbush, but should be tracking the biggest names to play the AI trade. As you can see, Microsoft, Google, Amazon, Oracle. Other names like Apple are in there, Nvidia. Is Meta not in here? They took out ServiceNow, Salesforce, and SoundHound, and adding CoreWeave, Iren, and Shopify. Hey, I don't mind that. Anytime you can get, there were some reports actually, I'm pretty disappointed. I obviously talk very highly of Shopify and have wanted them to do extremely well. And I've always said that Shopify's downtime is the difference between Shopify and some of these other reporters, other operating systems for e-commerce businesses. So the Wixes and the Squares and Squarespace and some of these names. I was disappointed to hear that Cyber Monday today, that they had seen some downtime. A lot of users have reported that they have not been able to access their admin. That had scared the crap out of me, because that should be the one differentiator. That should be their competitive advantage. Does that also mean that they are just seeing so much demand, I don't know. We'll have to see. The reports tomorrow end up coming out from all the big names, the Stripes, the payment companies, the Salesforces, the Adobes. All of these companies end up coming out and say, PayPal, come out and say how big a Black Friday, Cyber Monday actually was. So we've had some early reports, but it's not been inclusive of Cyber Monday. So we're still waiting for that. All right. What does Meta have to do with AI? I mean, it is funny, in my opinion, that Meta is not there, but Apple is. But they could absolutely turn into an AI name by partnering with names like OpenAI and Gemini and stuff like that. Meta is there? Did I miss it? If I'm not here to throw shade, it definitely should be in there. So if it's Google, Amazon, Microsoft... Meta is there. I'm so sorry. It was right under Apple. It was there. My bad. Okay. I'm not here to throw shade. Okay, it was an accident. I didn't see it with my own eyes. Regardless, what's the AUM even of the Ives ETF right now? AUM just under $1 billion. Currently down on the day. Okay. Chime is up nice. I didn't see a report. We can check to see if there's anything new with Chime, but honestly, this is because it's such a small name and they're so undervalued. It could be a single individual investor who's starting to build up a share, right? Like, I'm not saying Bill Ackman particularly, but like it could be any large super investor that just decides that they want to start taking more share in Chime, and that would just change everything. That would be enough to push this company higher. I don't see any news on Chime since November 21st. But they're still doing great. I expect great things from Q4 and then Q1. That's really where I think the price of the stock is going to change, is over the next 2 quarters. once we end up seeing that, it is a cyclical business because most of their consumers or customers are not affluent. So during tax time, it's actually like a payment time. They get a ton of tax benefits and refunds, and then they end up going and immediately spending that, which is sort of the problem, right? I think one of the hardest things about whenever people talk about UBI, sorry, I'm going to get a little bit, I don't know if this is even political or not, but whenever people talk about UBI or communism or some of these things or redistribution of wealth, stuff like this, what ends up happening is if you don't change the habits of spending, then that distribution of wealth immediately goes back to where it was. That the people who are living paycheck to paycheck end up splurging, and the people who are usually saving and frugal and trying to what do you call that? Delaying gratification, that they would just end up saving that money again. So it is literally, you see it in live time with Chime. They get these massive tax benefits, and then you just see their spend skyrocket because those people have extra money, they'll go spend it. Kind of sucks. But financial education could be the big key to that. People need to understand the risks there and the importance of having a little emergency fund. It completely changes the way you live life and makes things a lot less stress-inducing whenever something like your car breaks down or something like this for the average person. Okay, do we want to listen to Nvidia? Me. I can hear you guys. Okay, let's go ahead and listen to 2 quick clips on Jensen Huang and the Synopsys deal that ended up happening this morning. $2 billion investment into Synopsys, and they're doing a partnership go-to-market for new industries. Essentially, AI is going to be in every single industry. This is going to happen more times than once, but let's go ahead and have a listen.
Joining us now exclusively, and this is very exciting and timely, NVIDIA founder and CEO Jensen Huang and Synopsys CEO Sassine Ghazi. And both these gentlemen, I think, have a lot to say about the larger issues beyond what we've been dealing with. Gentlemen, thank you for coming on so much on Squawk on the Street. It's this timely moment.
Hey, Jim. Hey, Carl. Nice to see you.
Thank you. Great to be here.
All right, so Jensen, I'm going to take it head on. The first word that I saw when I was reading the partnership was expanded. So if it's expanded, explain to me why this is a big deal worth spending some time on for the world's investing populace.
This is a huge deal. The partnership we're announcing today is about revolutionizing one of the most compute-intensive industries in the world, design and engineering. Synopsys is pivoting across their company to transform their software and all the tools that the industry, the world's been using for some 35 years to be GPU accelerated on NVIDIA. They're going to pivot the company to build on top of NVIDIA CUDA, physical AI, as well as Omniverse, so that we could revolutionize all of these tools from EDA to SDA, system design automation, to CAE, to computer-aided drug discovery. This is going to expand the market of computing into the world of design and engineering for the very first time. This partnership is going to be revolutionary for that entire industry, expanding their TAM, expanding the capabilities. You know what's really amazing, Jim? This is really the culmination of everything I showed you when you visited NVIDIA years ago. It's taken this long for us to create the software stack necessary for Synopsys and the rest of the EDA industry and SDA industry in order for them to accelerate the software that they've historically only ran on CPUs. And as a result, we're able to do simulations at a speed and scale unimaginable in the past, so that we could do basically the entire engineering work inside a computer in a digital twin before we have to build it at all. So the type of products we can invent and the quality that we could do and the speed that we could do it at is going to be extraordinary.
Right, Jensen, I think that when you first introduced this to me, you explained to me over and over again, because I was so fascinated by what could happen with a chat GPT with the prompts, was, Jim, that's business to consumer, and it's really, really important. But you better start thinking enterprise. Enterprise is, you were using a number that is 10 times the size of what I was thinking about. Are you still standing by that?
Absolutely. If you look at what we're doing today, if you look, we've been partnering with Synopsys for a very long time. Nvidia was built on a foundation of design tools from Synopsys, and of course, many other companies like Cadence and Siemens and Dassault. These are very important companies that the entire engineering industry is built on top of. As a result of what we're able to do today, we're able to bring GPU accelerated computing, NVIDIA's CUDA, into the world's industrial sector for the very first time. This is physical AI. This is AI that obeys the laws of physics, that AI that interacts with the physical world. This is extremely complex stuff. It's taken us years to be able to do this. And now, if you look at the world's industrial sector, it's measured in trillions of dollars. So for both NVIDIA and Synopsys and the entire industry, this is a giant expansion of opportunity.
Okay. There was another clip there, but let's go back to markets in general, because things are continuing to tick up just a little bit to a more brighter side. The triple Qs, or also known as the NASDAQ 100 composite, is not breaking into positivity, but we could end up getting to green here, hopefully during the stream. That would be great if we don't end up seeing a reversal. It means Monday, the start of Christmas, the hopeful Santa Claus rally we end up seeing here. Wouldn't we love that? Nice Santa rally to finish out 2025. Let's hope. It's always good to see the first day of the month end up being live. Also, MongoDB earnings are today. You are correct. There's actually a lot of very interesting names that are reporting this week. It is an important week for earnings as we go to more of the software layer. So here, where can I take a look at this? Okay, MongoDB is tonight. Then tomorrow we have CrowdStrike, Marvell, Okta, GitLab, Asana. I mean, Box, if you want to include them. Not many people are following Box too much, but it still is a very big software name. The day after Wednesday, we have Salesforce, Snowflake, UiPath, C3 AI. So another big list of software names. The day after that, more cybersecurity, right? We have Rubrik, we have SentinelOne, we have DocuSign, we have Samsara, we have Hewlett Packard, we have Service Titan. So a lot of very big software layer names the next or this week, right? So that's very, very important. Keep an eye out for that as the market closes today. MongoDB. Whew, should be interesting. QQQs, slight red candles here. I'm looking for green. Does the market not understand? I'm a shareholder. No, I'm kidding. The market does not care if I am a shareholder. We all know that. But I can still be hopeful, right? Okay. As long as the world doesn't end, obviously, there's still going to be some Japan fears, maybe some Venezuelan fears, stuff like this. But if earnings still come in more positive than expected, I'm going to be a hopeful investor, especially in the software layer. I do hold Salesforce. I do want to hold a name like, honestly, I haven't even picked. Maybe I'll pick after earnings. CrowdStrike, Rubrik, or SentinelOne. I've been really thinking about Rubrik, but yeah. And then I look at some of the multiples on these businesses, because I think the whole industry does understand, like CrowdStrike, for example, this is not discretionary spend. This is like cybersecurity is never going to go away. It's probably going to increase in its importance. It just seems like a very interesting area for me. And yet, like all of that seems great, but the multiple is still quite high. you know. So that's a little bit interesting whenever I go to invest in some of these cybersecurity names. Yes, it is so great, but the multiple is still high. Okay. Let's go ahead and we ended up covering, did we talk about SoFi just yet? SoFi down 1%, 29.42. Okay, it was much better than where we were this morning, 28.67. But if we end up looking in the past 5 days or so, this has been some of the biggest run-ups that we've seen in a 5-day period. I mean, SoFi has just continued to climb up as the change of rate cut probabilities had essentially went from 30% up to 90%. SoFi had ended up seeing a big move there. And honestly, I think it should show you the strength of this business that we barely flew below $25. I think for a second we did, but we were extremely resilient. Okay. That was quite good to see, especially whenever you compare to the Robinhoods and stuff like this, that because crypto is starting to fall, that could impact some of the trailing 12-month revenue that has done very well on crypto going forward for Robinhood. In order, like, companies don't just need to put up the same amount of growth, they need to continue to grow, right? That's growth investing. So if some of that growth is even slowing or potentially goes into, like Robinhood's not going to make less money than they made last year, but on crypto it could, and that makes up for a large percentage of their revenue. So that does concern people, right? One is the Bitcoin price, one is the Ethereum price, but then the next and most important is the volume for Robinhood. That said, SoFi is just getting into crypto, okay? Hopefully, we end up seeing a crypto release soon. It doesn't look like it's going to be released today. Most times that we end up seeing a new product release for SoFi, it is right in the morning. It is expected. Maybe we end up seeing a slow rollout, but I haven't started to see screenshots online yet. Haven't been many people talking about it. But the sign up for the wait list for like the entry phase is over. So that finished yesterday. They also said that it's going to be coming by end of year. So, high probability that we ended up seeing some sort of, what do you call it? Crypto release in the next month or so. And then all of that revenue, even if it's small, is additive to SoFi's business. There's no deceleration from their growth. So that is quite interesting knowing that it's all being additive. Okay. So it would have been nice if it was a little bit earlier and for them to collect some of that growth. But honestly, their members are not going to be mad if the day that they enter in crypto, they're buying in at lower prices than, potentially getting hurt by buying in at much higher prices. If you're buying, Bitcoin at 120 and it falls down to 86, you can feel like, oh my gosh, SoFi just allowed me to invest in this thing and it's just crashed since. It's kind of nice if they end up getting in at lower prices. I'm on the wait list. No email yet. Yeah, that's what I'm seeing. Salesforce, where is Salesforce today? Earnings this week up 1.5%, 233. ServiceNow expected by the end of the week to vote on a potential 5-to-1 share split. Up 1% on these software names as well. Zoom up 1%. All of these sort of, software names have done terribly for the first part of the year. Like Salesforce has gotten its butt kicked while Palantir had ran quite strongly. Like you take a look at the last year, we're down nearly 30%. It's just incredible how much this has ran up to 370 and then all the way back down to 230. But I am a Salesforce shareholder. I am a ServiceNow shareholder. I like both of those names. And where's Palantir today? Palantir up 1.6%. And if we look back on the year, it's been a very strong year for Palantir. So I wonder if any of these software names are going to catch a bid at all, or if this is just, slight panic and maybe some people are looking at as a way to play software, but almost safer names, much more stomachable valuations. Okay. Looks like from at least this morning, not from where we ended up closing out yesterday, but from this morning we have been running up. And that's sort of been the theme of the day, right? It's been, wow, Tesla's green now, 430. Datadog is green. Costco, when are they not green? Lululemon, flat on the day. Dan Ives fund is now flat on the day as well. They were down just slightly. Let's see what's not working. IWM is down 0.6%. Meta's down 0.6%. I got to buy more Meta today. Rocket companies down 0.8. JP Morgan down 0.8. CrowdStrike down 0.8. Uber's also down 1%. Wow. Wow. Grab down 2. Let's see what are the big losers of the day. Bitcoin down 5.5%. Coinbase down 5. Oscar Health down 6. Solana down 6.5. Navan down 6.5. Bloom Energy down 6.6%. SMR down 7. Ethereum down 8. Better Homes down 8. Gemini down 8.5. Jeez. Now we get into the really bad names. The crypto, almost levered names. MicroStrategy down 10. SBET down 10. BMNR down 12%. Tanner, are you celebrating ASML's all-time highs? I mean, I can. Up 2.6%. Not all-time highs. 52-week highs. They are continuing to climb here, but they have been higher. Back in July of 2024, $1,110. Okay. Very, very cool on that name. Let's go ahead and take a listen to Gene Munster on his opinions of why Google might be the name that is not time to sell. Obviously, we've ran up a ton, but still could have a lot of opportunity going forward. Now, you know, there's been massive changes to Google's business, right? They are now working with Apple, with Gemini. There was talks about Opera GX with 80 million users on their browser now using Google Gemini models into their browser. That's also very exciting. TPUs. There's a lot of exciting things happening at Google, but obviously the valuation has changed quite a lot. Let's take a listen.
Our next guest says Alphabet could be the top Magnificent Seven stock that you should own in the coming year. Joining us now, Gene Munster, Deepwater Asset Management Managing Partner. Tell us why, Gene.
Joe, it comes down to carving out a niche within everything on generative AI, and they've done an awesome job of it. If you look at the growth rate of search, 2 quarters ago, it was 9.8%, then it went to 11%. In the recent September quarter, it was 14.5%. The street was looking for like 11, 12%, so nice upside there. But what my expectation that this is going to be the top performer in 2026 is based on a belief that the growth rate for search, which the street right now is at 11.5% for next year, I think it's going to be closer to 15%, much higher. And the reason is that they're essentially they're figuring out how to carve out how to harness this 2.5 billion daily search users and direct them into using generative AI, which is falling out into more search revenue. And specifically, they have this new mode, AI mode. It came out essentially 6 months ago, but they've been now testing ads within AI mode. It's like a carousel at the bottom of the generative result. And as they start to ramp that up in 2026, that should add to growth. And so when you put it all together, Joe, I think that the search is a critical number. And I think they're going to show some measurable upside in calendar 26.
How do you characterize the last 6 weeks or so just in the artificial intelligence sector, Gene?
Well, as somebody who's optimistic, who believes we're still in the second inning, I think the last 6 weeks has been a healthy test in terms of investors asking hard questions. I think the biggest tell for me, or the biggest concern for me, is related to how Nvidia shares. It's a stock that we own. But the guidance that Jensen gave at their recent quarter a couple of weeks ago was over the top good. It was higher than the high expectations, and the stock just doesn't want to go up. And I think, as I characterize the last 6 weeks, it's a tale of two cities. The fundamentals, evidenced by the growth rate essentially next year for Nvidia, going to be around 60% plus. The street's at just below 50%. Like that's a stark increase from 30%. 3 months ago. So we're almost doubling the growth rate and the stock isn't moving. And the tale of the two city piece is investors just are increasingly not wanting to hear it. And so this period that we're in right now of positive commentary, the Nvidia Synopsys news, I think is a sign that software still has a pulse in the AI world. If you look at AWS tomorrow, the head of AWS is going to be doing a keynote at their Invent conference. I'm sure he's going to be saying a lot of positive things, but the issue, I think, at the core of the last 6 weeks has been this disconnect between the fundamentals and how investors, and I just to pull it together, Joe, is I think ultimately is that the fundamentals are going to win, is that if in fact we are as early as I believe, yes, there'll be pockets where investors don't want to give credit to these companies, but eventually those stocks will be rewarded.
Really quickly, I just noticed on CNBC's live stream that there is a investors talking about SoFi. I just got a thing saying that SoFi was being talked about. So let's go ahead and have a listen there as well. I think you guys are right. I do remember Gene Munster being pretty bearish and actually calling Google the sort of eBay. I think I remember even being live listening to that and sort of laughing. Not laughing at Gene. Obviously, he is a good analyst and well, not analyst, but he covers companies well, and probably does well for his clients. But yeah, I didn't believe that he was right on that, and obviously he has been still very bullish on the AI trade, but it does mean that you can maybe miss some of the names. I just like you look at all of the tools that Google has to win, and I just don't know how you bet against that, especially whenever Sergey Brin and everything is coming back to work. It was just like, I don't know, man. I would never bet against that. Okay, let's quickly listen because SoFi's name ended up popping up on CNBC here, and it looked like it was positive coverage. Let's have a listen.
He joins us now. Several moves to go through. Wow, you bought AppLovin. That's pretty interesting. I hope you had a great Thanksgiving.
Why does it sound so quiet?
Us. Tell me about this move. As the target, by the way, today goes at Loop to 860 from 825. Why this one?
This pulled back to the February high and a lot of support. We've been watching this name for a while, and the balance sheet is great. I mean, they're growing margins by 70%, earnings around 90%. Yeah, the multiple's a little high at 43, but we've loved this name, clean balance sheet, and we like the space with the AI marketing. And the fact that we pulled back against support, which is against the previous highs, I mean, we think we're in a great bull cycle through April. This gives us a great spot here to put this name in the portfolio, and I hope it gives us reasons to increase this position as time goes.
All right, you've joined Joe because we talked about it many times. You have it in the T.
I do.
What do you think?
I like what Bill did here. It pulled back to the 100-day moving average at 523. It looks like it's held. The earnings were not bad at all that were reported recently, and they are seeing very strong momentum in gaming, in AI, in automation, and certainly advertising.
All right. Also, ISRG, right? That's a new buy.
Yeah. So we've been leaning into healthcare, and ISRG gives us that, but it also gives us the robotics. I mean, as AI, and we see that get further down the road here next year, it's what businesses are going to get impacted. What we're seeing here from ISRG, it's a multi-year compounder. It's only up about 10% year to date. So I think this is a great consolidation year for the company, and they're growing this robotics revenue about 20% annually. So I think there's some really good legs here next year. That's what we're planning for.
All right. And how about SoFi? That's a new one too.
again, looking at next year, I think healthcare is going to continue to benefit, but then banking as well. And we're going to see names like SoFi that utilize AI to help their profitability, to gain more business. Now, they did return to profitability, which is a positive. Now, it's, you know, this name, I think there's more momentum behind it than really the clean balance sheet part of it. But I think that's going to continue to improve, and next year could be a really great year for it.
All right. You also bought more Micron and more Vertiv as well. Yep.
Yeah, Vertiv was a new name we added about a week and a half ago. Now, we took down Tesla in the portfolio, and this gave us a reason to lean into another sort of AI name. We like the infrastructure here. Great balance sheet, great moves that we've seen in this name on the year. Again, pulling back to support the previous highs. January high as well as the July high, 100-day moving average. It's responded in the following days. That gave us a reason to lean into it further on Wednesday. I think this name is going to be, you know, it's going to get above 180 was the hope here this week, and to continue to run out above.
Honestly, I think you're right. That did sound like that upstart moment. What even was that? He said, the balance sheet's not great, but they have momentum and AI is going to play a part. Huh? Like, I'm bullish on SoFi, but that's not a thesis. You know, if you were to compare SoFi as a bank, which he called it a bank, there are much cheaper businesses in the banking side. I'd rather buy JP Morgan if I was looking for strong balance sheets and AI plays. Like they're going to be investing in artificial intelligence too. That's not the bull case. Anyway, yeah, there is Chris Lapointe is going to the what is it? I don't remember the is it UBS? What is the gosh, I got to find that. There's a bunch of companies that are doing a thing on Wednesday. We have Chime, PayPal, SoFi. Yeah, UBS Global AI Technology Conference. What's the bull case? Go watch the, 400 plus SoFi videos that I've put out, but mainly on loan platform business and rewriting of credit card debt and their ability to attract new users and being a neobank that ends up attracting younger customers. Just calling it an AI play with a bad balance sheet and momentum. It's like, what are we talking about here? Okay. Thoughts on Shopify? I'm a bullish Shopify investor. Okay, you guys said that they were talking about Vertiv, so you wanted to hear the rest of that. My apologies.
This infrastructure play, I think names like that in the AI space and data centers are going to continue to see the revenue growth into 2026. Vertiv is going to benefit. Micron as well. Micron is a very low multiple. What is it? 157% earnings growth. High bandwidth memory. You're going to need high bandwidth memory for the energy efficiency in the overall as these data centers and AI continues to improve. Micron and these high bandwidth memory chips are going to be a bigger and bigger part of it. So the name has been less cyclical than it has been in the past. And I think that's another thing here, that it's such a low multiple around, it's about a 10 multiple here. This could go with the repricing to say 20 multiple at some point, and this name is going to double. I really like this name. We added to a concentrated portfolio as well with the starter position at a 3.5% slice.
All right, good stuff. Thanks for joining.
Okay. Yeah, I don't know. PayPal's a good AI name with agentic commerce. You're right. They definitely are going heavy into agentic commerce, but could you think of a name that might be a little bit more concentrated into artificial intelligence? Like, whenever I think of, I recently broke down my portfolio into all of the different sectors that I believe are why I'm investing in them, right? So for Meta, there's a good chunk in artificial intelligence. Majority is in advertising. E-commerce plays slightly. Google, you have to play all of the different names, like across, cloud, AI, advertising, the small thing for payments as well, because they are in, Google Wallet and stuff. How much percentage of PayPal's name would you say you're investing in because of artificial intelligence? I would put that near zero. Like, I think payment companies need agentic commerce because there's like that's the only way that they're going to survive. The companies that don't go towards agentic commerce are literally going to lose. But Visa's doing it, MasterCard's doing it. Like there's no name that isn't. So if there's no differentiator, that means that there's no market share gain. And right now, PayPal is not gaining market share. They're growing slower than the e-commerce space. So I don't know if I'd look at that as an AI name. Okay. BMNR is killing me. It does. It sucks. it absolutely sucks. But from a lot of people, there's been a lot of commentary recently to say, hey, this is maybe just the start of the crypto winter, and this could get much worse. It would be interesting. Just the start. Yeah. I mean, I'm going to continue to buy on the way down. I'm not going to try to call the bottom. I do like Ethereum and the way that they are accumulating and buying more, or well, not buying more cash. Essentially they are, but they're diluting to accumulate more cash so then they can buy the dip. Okay. I don't know about the DeMark analytics that is able to call for the bottom, but obviously, Tom Lee is continuing to accumulate more and more cash. So they feel like, Ethereum could probably go lower. If they thought it bottomed out, they would pour all their cash into Ethereum. They continue to add, so they continue to think that it's going to fall. Tom Lee can say something through the end of the year, but his buys are not. Why would you hold cash if you think Ethereum is going to skyrocket in 1 month? That to me, that doesn't make a lot of sense. Not putting more than 5% into BMNR, Jack, I think that's extremely smart. I would not full port into BMNR just because they're down. That's not a reason to accumulate more shares. But Chime is up 6.6%. Yeah. Where can I find your portfolio? Right now, my actual portfolio is only available to course members. And all my live buys and sells and everything. I know that's not everyone's preference, but I wanted to give as much value to the people who had supported the course. So I'm just doing exclusively for them, and that's not going to change, unfortunately. But honestly, ask me a question. I've been pretty open about every single position in my weightings and everything. So you just can't see it in real time. But I'm not trying to hold back information from you guys. Okay. In August, Tom Lee said ETH is going to 9K in December. We went into too fast, too soon. Well, yeah, but you never know. I don't know. If you were to have held out on CoreWeave whenever they were showing off Q2 or whatever, you would have gone from it dropped to $50, skyrocketed up to 180. And then has fallen back down to what are we at actually? Are we still around $75, $76? But I don't know if it's that easy for me to quote unquote call the bottom. I think great companies should accelerate over time if their growth is accelerating. I always get in trouble answering this question. Do you own Rocket Lab? No, I don't. Why not? I don't. I can't wrap my brain around the space industry quite yet. And I don't know who the winners are going to be. It's not really a passion of mine either, unfortunately. Yeah. How much of your portfolio is Nvidia now? It's around 39%, something like this. 39%. Sorry, I literally just checked. It's 40.6%. BMNR has no revenue, no real value. Well, it depends on what you think of Ethereum. So, does a real estate company that has a bunch of land and there is like, they will have revenue, by the way. Their ability to stake will be immediate revenue flowing all the way down to net income. But what does that look like for BMNR if they have a ton of an asset that you believe is worth more into the future? I don't think that can be looked at, BMNR. They are a treasury company, so it's not going to be looked at the same as a name like Nvidia or something like this. But it doesn't mean that they're not still valuable. I'm buying a little CoreWeave to lower my average. I don't think that that's a bad idea. I like, how can you not like CoreWeave whenever Nvidia has sort of backed, like they've sort of made it so then they can't not be at full capacity. They said, hey, you know what? If there's any additional demand, we will buy it all from you. Well, I mean, that sounds like a pretty good deal if I was a CoreWeave investor. You are like this with the biggest, most powerful company in the world. And for some reason, Jensen just loves you. You set up the data centers better than anyone else. I think, now I'm not making a call on technical analysis, and I don't even hold CoreWeave. But whenever people tell me they hold CoreWeave, I'm like, yep, makes sense. I see what you like. I get it. It looks bullish to me. Now, I'm not saying the charts look bullish, but yeah. Okay. Not for some reason. No, I'm clearly, but yeah, I'm just saying to the people that are bashing and selling off CoreWeave or calling for their demise, I would just look at their positions here. I think CoreWeave has $40 billion in backlogged revenue. I like that NVIDIA has also partnered with Vertiv as well. Yeah, NVIDIA hopefully is going to be partnering. If they are going to become the name that everyone wants them to be, they need to partner with literally every single software enterprise name, everything. I think there's so much growth to go around right now. The sort of idea that NVIDIA has done with these circular financing and buying more equity in a bunch of these businesses, I do not think that's over. I think that's going to continue. So if you don't like that, I don't know if I'd be bullish on the AI names, but I do like it. I do think that NVIDIA has way too much money. And what do you do with that? Do you just pour it all into buybacks, or do you try to strengthen your position and build a venture arm? Hopefully we see the SoFi crypto thing. Sorry to pivot a little bit, but I am sad that we didn't see a launch of that product today. Hopefully we see it this week. It could be as early as tomorrow. I mean, maybe it comes today, but I don't see them doing something not in the morning. If they're going to launch a product, it's usually at like 8 a.m. So hopefully tomorrow we wake up to SoFi being up quite a lot. Okay. Let's hear calm and de-escalation on U.S. trade talks. This could be quite interesting, especially if, U.S. silicon can make its way back into Chinese hands. That could be quite the bonus. And NVIDIA has even said that you should look at the China revenue as being just a bonus. Do not factor it into your outlook. Just assume that that's going to be some upside if you think that's going to close.
Facebook is out with some upbeat third quarter data. The group says that China's national revenue and profit growth has improved, but a private survey today showed that the country's factory activity unexpectedly contracted last month. Joining us now, China Beige Book COO Shahzad Kazi. Things have not. Welcome. It's good to see you. Thanks for doing it. Things that haven't been great. It's kind of gloomy over there anyway. Stock market's been okay, but what for people that don't follow it closely, what has the last 6 months looked like for the China economy?
Yeah, the last 6 months have actually, by comparison to the consensus out there, have looked better in our proprietary data. I think a lot of what's happened here is that the government was releasing very, very strong data in the first 6 months of the year for sure. And since then, really almost mathematically, because of the way they calculate their GDP, they have been rolling out much more negative, I would say, in some ways, and data. And the economy certainly has been slowing in official numbers, which has painted, of course, a picture that the Chinese economy is now slowing down. We, on the other hand, say things were actually worse when the tariffs were at their peaks, and since then have gotten better.
Really? What about, I mean, credit is not great, not that many. It doesn't seem like there's expansion, but you're bullish on manufacturing right now?
I wouldn't say necessarily bullish on manufacturing, but the reality is that it's not falling apart. The PMIs will tell you the story of contraction, but the economy most certainly is not in contraction. Even industrial production, while it has slowed down in recent months, is certainly nowhere near contracting. But I think the thing that tells you most about the fact that there isn't this large amount of stress necessarily on firms is the fact that you don't see high levels of borrowing still, despite the fact that credit costs are actually still at multi-year lows.
Does this give China more leverage or less leverage in dealing with us? And are they? Where does trade stand right now? Everybody's complying with the latest agreement. We haven't heard, a lot of rhetoric from either side about that. China has been off the map for the trade problems.
That's right. I mean, I think there's this managed calm and de-escalation that is taking place, certainly from the U.S. side, but also to an extent from the Chinese side. I mean, they're slow rolling out the release of some rare earths, the light rare earths, nothing that we are going to need for defense and aerospace and such. And we certainly are hoping that they start to increase their soybean purchases, but we've massively scaled back our own export controls, which of course raise very serious national security concerns and alarms. So, both sides are playing this little dance here, I suppose, till the lead up in April when President Trump goes over to China for the big summit.
Did China show any negative effects from U.S. trade moves in the last 6 months?
The brief period, in the last 6 months, not so much, but the brief period where there was this massive and rapid escalation of tariffs, we very clearly saw the results, whether it was April and even going into May. But then, of course, those were brought down about as rapidly as they were ramped up.
But we heard that they were in a great bargaining position and they could withstand it. Who can withstand it more, us or them?
They certainly have the ability to withstand it more in the short run because of the lack of the kind of political pressure that we would face over here. But the thing is, they've shown us that they have shown us how much leverage they have through their rare earth export controls, for which we unfortunately didn't have an answer. And now we've kind of capitulated, especially on export controls, especially on technology.
Because of the rare earth. That was their trump card, so to speak.
That's right. And I think that only makes Xi feel more confident and stronger. Marry this with the economic data, I think they have a lot of leverage.
But using a card like that sets things in motion that puts the United States and other countries on alert that, hey, we cannot allow this to continue. We're going to change it. It may take years to build up to the point where they no longer have that lever over you, but you don't use a card like that unless you feel so threatened that you know something really bad is going to happen if you don't prevent it. But what you're doing is not preventing it, but putting it off.
That's right. You will provoke a response. Now, of course, China will consistently compete on price. So even if we manage to get all these deals off the ground, mining, processing the rare earths, et cetera, can we ultimately compete with Beijing if they just keep cutting prices? That's number one, which is why my message constantly to folks in DC is we have to find a way to also compel our companies to contract with these producers, because otherwise they're going to go for the lowest provider, and that's most likely going to be a Chinese company.
Has the landscape of who they export to, have they tried to change that to become less dependent on exports to the U.S.? Have you seen that?
That's clear in their numbers, but it's a combination, I believe, of a lot of it is actually trade diversion. So direct trade with the U.S. most certainly has been going down. Our numbers show it as well. So it's hard to replace America. You can sell more to Africa, but you're not selling the same kinds of stuff. And then you can do the trade diversion, which is really the big problem that needs to be tackled.
They aren't buying our bonds as much, are they? I thought there was a low point that we hit in treasury purchases from China.
they've been slowing down their purchases as well. Recently, I believe the trend may have reversed a little, but really by historic standards, it's slowing
But
down. Yeah.
bonds they're ready to go under 4%
Right.
on the 10-year.
Yeah, it hasn't had that kind of effect.
As an FT, I almost tweet. I don't feel like tweeting anymore.
Really quick, because we just got some quick news here that South Korea just got its first delivery of 13,000 NVIDIA GPUs, including Blackwell 200s, as part of a plan to deploy 260,000 chips that analysts peg at about $10.4 billion worth of orders. $10.4 billion. I don't know. Maybe we should sell. Who thinks that? They hear this news and they go, no. You know what? We got to sell. Brad Gerstner is also coming on CNBC tomorrow, so we'll hear a lot of his thoughts on not China, but on Nvidia and some of these AI names as well. I'm sure we're going to see some of that. Really quick as well, we ended up seeing a report from the Insider that said SoFi's, what do you call it? SoFi's remittance payments. Geez, I couldn't think of it. Well, we do know it's coming to Mexico, Brazil, and Europe. Now we have potential that they're looking into the Philippines and India as well. India could be an absolutely massive one. Largest population in the world. Who knows if there's going to be lots of remittances from SoFi users. Could be quite interesting. Keep that in mind. Let's check the fear and greed index of today. We're still in extreme fear, but we're about to enter fear. I know that doesn't sound bullish, but it's a little bit bullish. 25 is sort of the benchmark between both of them, extreme fear and fear. So a massive cooling off from where we were, almost 2 weeks ago, hitting around 5 or 4, I think, on the fear and greed index. Quite strong. Maybe some of this, the less fear, has to do with Trump saying that they have, the nominee in mind, or the person that he wants to appoint as the next Fed chair. Currently, they have not said it. They said that they're going to say it before the holidays, but Kevin Hassett is just blowing it out of the water whenever it comes to the chances that he is the one. I also would think that it would be Kevin Hassett as well, just because of his proximity to Trump, at 75%, up 20% since Trump said that he had someone in mind. Quite interesting. If that ends up happening, Kevin Hassett has been quite bullish on crypto as well, but also cutting rates and being quite dovish. So that's exciting. Anyone that Trump would have put in is obviously going to inherently be very dovish, wanting to cut for more reds and loosening monetary policy. So then to hopefully try to ignite more growth. That is quite exciting. Jay Powell is talking tonight at 8 p.m., but he's most likely not going to be talking about anything policy related. Now, there has been some reports that have gone, or some, I think it was Bloomberg that also reported on this as well. But as you can see, there's been some things online that have been catching a little bit of steam, talking about how Jerome Powell is rumored to be resigning today. And that's what he's going to say in that 8 o'clock meeting. It's just a rumor. We don't know. But I think if something like that does end up happening, it actually would be, potentially good for not good for markets, but if we know that Kevin Hassett's coming in next and people believe him to be very dovish, then that just takes away a lot of that uncertainty. So that could be quite exciting. Do you think Wall Street and big money is selling every pump for Nvidia and Hood? Well, Hood is much different than Nvidia. I don't think that those two are the same. Well, it's talked about evenly on my channel. Hood has a reason to be down. during extreme fear, and retail has sort of been trading less, if that's the case. Like the price of assets doesn't correlate with the volume, but usually retail ends up getting discouraged by red days, especially red weeks. We're pretty good at buying the dips in the short, like in short bursts, but then as time extends, that gets very hard for retail to continue to stay bullish. So Hood does have some reason to be down. Nvidia is accelerating guidance, constantly putting out more partnerships, constantly selling to new geographies. We see a report every single day of some, new multi-billion-dollar deal that's going to happen with Nvidia. I think that it's insane that it is selling off. So that's very important. Let's see. Tanner, why would SoFi potentially rally tomorrow morning? Is this supposed to be like a trick question? I mean, if, for example, we think that a rate cut is more confirmed tomorrow than it was the day prior, then that could be a reason that SoFi would pump. It would also be a reason to pump maybe if SoFi does release crypto and they start to see some, something like this. No, not at all. What, huh? Weren't you the guy that asked the question? Did I even say they're going to pump tomorrow? I don't think I even said that. I said the markets could definitely rise for sure if JPOW ends up resigning. I don't think people like the. I did. No, I just mean that JPOW, if he ends up resigning, and that takes away from some of the fears, we know that the people that are going to be replacing JPOW are going to be much more dovish than he is. Okay, he's not being kicked out; he's resigning. So that still holds Fed independence. No one's concerned that the Fed is losing their independence or anything like this. I don't think that would be a reason for it to go down. I heard you say throw everything into SoFi tomorrow morning. Okay. SoFi will never. I'm going to flip my desk. SoFi will never be free cash flow positive. Look at any bank, and then you tell me where the positive free cash flow is coming from. Free cash flow is not aligning to their cash balances. Okay, it's the way that free cash flow is calculated, that whenever they turn a loan essentially from held to maturity to held for sale, that counts as a negative, sort of a negative number towards their free cash flow. They'll always be in negative free cash flow, but that doesn't mean they're burning cash. Okay, it's just the way that specific number, which is essentially a gap number, is calculated. It's not that they're burning cash. It just means that they're lending out money. They make more money than they previously had. Tanner, I have $1.42. What should I buy? Like a Snickers bar or something. Oh, I know you don't have $1.42. You just gave me $40. And if you gave me your last $40, please send me an email. I'll send you your money back. Okay. I'm going to get a bunch of emails from like random email addresses. Hi, I was Jonathan Price. Can I have my money back? Crypto could get beaten down for a while. Yeah, it's definitely a possibility. Now, Andre Jick, I was talking about this on Amit's channel. He had this. Let me see if I can find the screenshot for this. Andre Jick was talking about this, and I'm not a TA guy. So anytime I ever go to bash the TA, and I'm not trying to, but it somehow ends up being that case every time. He's looking at this, and his explanation was that we hit these all-time lows, and then it takes, 1,050 days of essentially like a bullish market. Then we hit an all-time high. Then it takes 364 days of heading down to then start accumulating back up. And then this cycle has repeated. And now we've hit that time after 1,064 days. Now it means that we're going to have 364 days of this essential drawdown. Okay. By the way, you guys are crazy. Gifting 5 subs from Mostly Power. And Jonathan Price had found more money, gifting 10 future investing memberships. Thank you so much. You guys are turning the entire chat green. 15 more people just became members. And I really, really do appreciate that. Thank you guys so much. That's insanely generous. But, and by the way, I love Andre Jick. Everyone should go subscribe to him. He's one of the best people on YouTube that cover financials, especially crypto. And he's a big Bitcoin maxi. That said, am I crazy? This line is essentially calling for an all-time high. But I'm looking here, and these lines, like, that's not the top. So essentially what he's saying is every time that this happens, like now we've potentially hit an all-time high. Now we have 364 days to fall down. And now we've started this drawdown here. So people are getting concerned, right? But you're calling this at the high. You're calling this at what was around the high. But still, that makes a lot of sense. This is not the high. What is this? So if you were to actually put this line on the high and then it actually on the low, that would change the timeline. The graph would look completely different. And why didn't that happen over here? Did this line not align with, like, I just don't understand, man. This is not the bottom. That's the all-time low. Oh my God, again. It's just like, guys, am I crazy? Like, what am I not learning here? Andre Jick sucks. I will not allow that in my chat. That's not true. Andre Jick said absolute gem. It's not him saying, okay, you're right. I'm not saying that this is he's highlighting what people are stating online. You're completely true. But honestly, like, you see 2 different graphs, right? Like, some people can post and say, hey, you know what? Bitcoin's at an all-time high. This has happened all of twice before. By the way, in order for you to find a trend, you need to find more than 2 data points over multiple decades. Let's see some real data here. And then even in those 2 data points, it doesn't even look remotely accurate. But, people are highlighting this trend. And then you come out and also see, like, Tom Lee and others saying, no, we're actually going to rip much higher. So what's the truth? Tom Lee is calling for all-time highs and has been right much more. So did Tom Lee not see this chart? He didn't watch Andre Jick's video? Tom Lee should have watched Andre Jick's video. That's my only problem with these things, Robinhood present. Oh my gosh. Oh, wow. Okay. Robinhood's going in, ladies and gentlemen. I think this was just posted. Yep, it was. I'm going to mute the music because it's going to get me demonetized. But Robinhood just announced yes, no as an event. This was supposed to be their AI event, by the way. Now it's starting to look like some version of a prediction markets event. Prediction markets, artificial intelligence. Yes, no, tune in December 16th. Wow. Wow. And this is not an in-person one. From my understanding, they were doing this over the air this time. But that is really freaking exciting. Okay. A prediction markets AI. Yep, I did just get an email. So, okay, wait, let's see what they sent out. Robinhood just sent out a prediction markets update as JB McKenzie appeared on Bloomberg TV sharing that November was the biggest month yet for prediction markets. 3 billion. Oh my God. What the heck? Okay, so just to put this into perspective, Q3 was 2.3 billion contracts traded. In October, they did 2.5 billion. So October was bigger than all three of those months put together. November did 3 billion contracts, up 20% from October. That means in the last 2 months, they've done 5.5 billion contracts. And in the whole time that they've been in the contract space, they've done 9.5 billion contracts traded. They've doubled in the last 2 months. This is not stopping, dude. No wonder. They probably changed their entire presentation. We announced, oh, wow. Robinhood presents Yes No on Tuesday, December 16th at 9 p.m. Eastern Standard Time. That's late. Okay. The event will cover our latest AI innovations and prediction markets features. Yeah. Okay. I don't even know if I was supposed to read that email out, but you guys got the latest and greatest. AI innovations and product and prediction market features. A prediction markets event. Cool. Sorry to just no one's talking about Apple when it's at all-time highs. I'm just not a thank you so much for the donation. It is at all-time highs. And Apple definitely deserves to continue to grow because they are growing, right? And they're able to monetize their iPhones more. And I honestly think just talk about one of the greatest innovations of all time, and I don't think it's going to go away, is the smartphone. And by the way, I don't think Meta is going to replace your smartphone with glasses. I think they're going to be the same way that an iPhone and a watch go well together. I think the glasses are an accessory to the smartphone. The smartphone still is going to be the massive advantage. Now, listen to this. This is where it gets really cool. Whenever you're talking about artificial intelligence, how do we get the best out of artificial intelligence? Well, you need reasoning, okay? Reasoning takes time. You need actual time to process those tokens and to get you an answer whenever you're asking a question to artificial intelligence, to like an AI model, okay? In those glasses, you only have so much space to put, hardware that actually allow you to create those types of answers. One thing that I heard get pitched to me was when Apple starts to come out with glasses and AR glasses, they are actually going to run the compute locally on the iPhone in your pocket and then Bluetooth the answer to the glasses. Okay. So you can have so much power because the device is so much larger, run in your pocket and then go to your glasses. Think about the amount of inference that can happen there versus what can happen locally on your glasses, or even be sent out to a data center or something. Then you would need Wi-Fi or some sort of hotspot or something like this. And then the time it takes to get that answer back, that's going to bog up systems. The phone inference sounds way cooler to me. And I think that Apple is being counted out too early. But I just wish that they made more investments towards artificial intelligence. That's my true feeling, is like, I just don't feel like they're investing enough today, but I don't think it counts them out. Yeah, but cloud computing takes time in order for it to relay back to the glasses from, like, that also means that you are somewhere where you can get a signal. Surely phones have to go? No, I don't think so, man. I like phones. Like, I've got no reason. I don't agree with this whole idea of no visuals. Like I'm going to ask an AI agent to book me, like those rabbit devices or, pendants and stuff like this, where you just tell it to book you a vacation. There's not a chance in heck that I would let anyone book a vacation for me that I haven't been able to see. I want to see it. You know, I don't care if you tell me it's 5 stars. I want to know what it looks like. So I think half of these things just have to be done with some level of visuals. And I don't know how you replace a phone, like a watch, but even then, like I'm not I don't know. I could be wrong, but I honestly don't think the smartphone's going anywhere. Okay. I also don't think people have a problem with the size of it or anything. Like we ended up seeing for Apple, which, yeah, that is a new all-time high. This candle right here, intraday all-time high. They made a thinner iPhone. No one cared. No one bought it. They practically. Tanner, we need better eyes. Eyes have to go. That's how I feel. I'm like, guys, no, eyes are doing well. I don't care if artificial intelligence tells me how many steps I need to take to get to my location. I want to be able to see for myself. But who wants to carry a phone if you have glasses or a watch? I think that for small things, that's fine. Okay. If you're going out to dinner, you might not need to be able to carry your phone or something like this. I also think like wallets are going to go in the ditch here soon. I hold on to my wallet for an identification. And right now where I live, Ontario, there's no alternative to that. I can't upload my driver's license to my Google Wallet. The day I can, I'm never carrying a wallet again. Like, this is useless. This can go in here, okay? But yeah, I think it'll be a while, at least to replace iPhone for long trips. If I'm going out to dinner or something like this, and my glasses can do everything, and I can pay via my watch or something, I might leave the watch or the phone and wallet and everything at home and just do everything from my watch and glasses. That might happen one day, but I'm still buying a phone. It's like saying laptops are going to replace desktops. You know, guys, no laptop is replacing the command center that I'm sitting in front of right now. But laptops are still cool. Whereabouts in Ontario? I'm in Toronto. T-Dot. No cash for you either. I haven't had cash in years. I had went to like a, do you guys say Jack and Jill? Do you guys say that? Like a thing where someone's getting married and they want your money, so they put games. But that's all cash. So I had to like literally call around for friends. I was like, hey, do you guys have cash? Hey, do you guys have cash? Because I don't really even have a relationship with many of the big banks anymore. So I'm like, I can't even go and pull out cash. The only relationship that I have is like with TD, and it's with a brokerage account. So I can't go pull out cash. So, you know, got $100 from a buddy that was also going, and then I was like, all right, well, I'll just play a couple games then. Much love from Winterpeg. That's funny. But yeah, honestly, like, let's no ATM. For real, Lisa, I didn't even think about that at all. Now that you've just said that, I feel like an idiot, because the company that I do work with doesn't even, they reimburse all the ATM charges. So cake on my face. But for real, that's the answer. The answer is an ATM. And I didn't even think about that. And I talk about it all the time. Tanner's the fintech guy. He didn't know ATMs exist. Okay. Have you ever heard of Drake? You're trying to do the emit joke, and I'm not having any part of it. Okay. Beyond Meat up 18%. What the heck? What the heck's happening to Beyond Meat? Wait a second. Is this a Wall Street Bets thing? Beyond Meat. Short squeeze hopes. High interest, high short interest fueled by the jump. Yeah. Yeah, a lot of people are calling for a short squeeze. We'll see. Maybe we've already hit the top. Maybe it has more legs to go. I guess Tanner never gambles or buys drugs. Shake my head. Here's the thing. I don't do either one of those things, but we also have to remember Canada is cannabis is legal for recreational use. So if I wanted drugs, I would use my credit card. Like, but I don't even smoke or do anything. But you just walk into a store and you can pay with tap. But yeah, I don't gamble or do any of those things. I have legitimately no need for cash. None. Even whenever, you know what's so funny is even whenever I was buying my house, I didn't have a relationship with a big bank that could like spot me my down payment because the brokerage and the services that I use, they're like, hey, yeah, you tell us whenever you need, you know, the certified check, and then we can get that out for you in 7 days. I was like, my lawyer wants this by noon. Like I don't have, or maybe it was 3 days or something, but I remember I needed it by noon. And I didn't have my down payment sitting in my checking account. So I was like, so luckily I've got some rich friends. I said like, hey, can you spot me 200K? And then I sent it to them in 7 days. But, you know, it's just crazy that, like, I don't really have many of those services using fintechs. It's not even possible. I think it was 3 days. But still, my lawyer was like, hey, we'll know the exact bill, and then you need to get it to us by noon. I was like, what? They're like, yeah, just walk into your, you know, your local branch. They will know. It's perfectly fine. I was like, I don't have a local branch. What local branch? You actually can't buy marijuana on credit. Okay, well, I actually didn't know that. I thought you could. They don't have debit and credit machines. Like they're legal shops here in Canada. No, I wasn't a loan shark. They didn't charge me any interest. They just spotted me. I've got friends. I'm good for it. I tap away. Okay. Well, arrest that guy. That person does drugs. Arrest Scary Insights. I buy cannabis with credit all the time in auto. Okay, yeah. So there you go. I'm pretty sure you could. It's a legal business. Like they don't even like the signs on the storefront say like, you know, cannabis here. Like they're not hiding it. Admit, brother, we already talked about it. We already covered it. You're late now. All right? We've already done it. However, you did give a better update. But yeah, we saw the 20% or the 3 billion contracts traded, everything. I'm up to date here. But honestly, you are the best guy on X. Yeah, look at this though. Isn't this crazy? Like October was 2.5 billion, November was 3 billion. That's more than half the contracts ever traded on Robinhood in the last 2 months. Do you think that's going to slow in December? I don't think so. Like this is going to be a huge part of their business. Check out Amit on on X. I started laughing because I'm like, me trying to promote Amit is it's cute, but you know, he does do great coverage on X. I don't know why. Like, I see all the news come in, and then I'm like, okay, I'm going to put it out into text form on X, and I just can't wrap my brain around it. I'd rather just make a video. Okay. Hood is such an easy calls play. It depends if we go like, well, prediction markets are picking up, and it is going to be a great way to diversify if the markets are a little bit choppy right now, to know that like a completely different audience, like not the same customers, a new cohort of customers is coming in, and they are making them just tens and tens of millions of dollars in this brand new area that, you know, is one day going to be $1 billion run rate business. It's educated gambling. But yeah, like I do think that people can have an information edge on prediction markets, 100%. But you know, no one knows the future, so they're still betting on it. Tanner promoting small streamers. I do. I'm trying to do my part here. But regardless, they're bringing in a new cohort of users. That cohort is not lining up. Like, there's no 4-year cycle on prediction markets. You know, there's no worries of bear markets or something like this on stock market or on prediction markets the way that there might be on stock markets. It might still be impacted by labor market data or stuff like this. If there's less discretionary spend, maybe less people are spending it on gambling. Maybe not everyone that's doing prediction markets is gambling, but there's definitely a good cohort of people who are just wishing for 3 sevens to come up, you know? Yeah, I'm in the 6. Real Toronto mans. Don't I look it? I'm pale and everything. People are like, oh, Tanner, you need to go get sun. I'm like, there's no sun here now. Like, we're about to go into the dark ages. This is 28 days later. I'm like, it's cold. Everyone's miserable. And the government should hand out vitamin D pills. And I'm not even joking about that. They really should. If you actually cared about the health of your population, like a place like Canada should mail out vitamin D. There are gingers in Canada. All right. Someone ban that guy. Any ginger comments, straight to the gulag. You guys are gone. Okay? Okay, unban him. I'm kidding, but all right. Did we talk about Google Gemini models in Opera GX? I thought that was quite interesting. Let's take a look back at Beyond Meat, up 19% these days. You should become an outdoorsman. I honestly think that might be where I'd probably be happiest. But also, it's kind of cold out there, you know? I don't want to. Beyond Meat. My family's calling. Hang up on him. Not talking to my brother right now. Talking to you guys. If he calls back, I'm going to have to take it. I mean, let's not. Gosh, I hope he doesn't call back and he's like, tells me the absolute worst news. I don't want to jinx it now. Okay. Toronto Daywalker. Yeah. Chime up 6.6%. Celsius up 5.5%. Applied Digital up 4.6%. Congratulations. Many people in the chat are trying to get me in this name. It's probably worth a deeper dive from me. But I just haven't done it yet. Amcor up 4.3%, $38 a share. This one has been running. So in the last year, up 43%. Year to date, up 45%. In the last 3 months, 62%. Reddit's up 4.3%. Rivian up 4.2%. Rivian's another one I want to take a look at. Shark Ninja up 4.2%. My dog is getting restless here. She wants to leave the room. Okay. But, ladies and gentlemen, unless there's some news that we want to cover, I already covered the hood news. Yeah, more reports saying that Jerome Powell is likely to announce his resignation today. We will see. But I think we've covered all the big news today, and the things that are moving. Beyond Meat's still moving, though. This one, honestly, we might just have to keep an eye on. Up 21%. Is the short squeeze here? Are meme stocks back? Ladies and gentlemen, yeah, my meat boys, get your meat out. It's Beyond Meat. Don't get your meat out. That was, we're talking about a vegetable vegan company here. Okay. Meme stocks can come back for sure before year end. Hopefully, a lot of this trading is also done on Robinhood. Are we pushing to new highs for the day? Up 23%? Come on. 121's the break. There we go. 122, ladies and gentlemen. Let me let my dog out. She's freaking out. What's up, baby? You want to jump up? Hi. How you doing? Oh. How you doing? How are you? Okay, I'll let you out. All right. Let's go. Run along. Okay. That said, Beyond Meat up 23%. Whew. I try not to get the face licks at all. I'm not like that with my dog. I'm not not a fan. She tries to get me. I dodge. Okay. Let's potentially see. There's some people talking about where this Nvidia Synopsys deal might mean for growth next on the company. Let's have a quick look. And that'll also allow me to go pee, because these long streams, I just can't do it, guys. I'm not a Mitt. I drink water, okay? I don't know how he does it. You got to take breaks.
Welcome back. Nvidia is taking a $2 billion stake in Synopsys as the company's partner on product development. Let's bring in Christina Partsinevelis to explain. I heard the interview earlier, Christina. It's about their like software and design, but $2 billion isn't a huge bet for Nvidia. Why do they keep doing these?
Well, this is actually about a $2 billion investment in Synopsys, and it's really a signal about where NVIDIA sees the next wave of growth. Synopsys, to your point, Kelly, makes design software for engineers. So, for example, let's say you're BMW, you're designing a new electric vehicle, or even a shipbuilder designing next generation vessels. You're probably using Synopsys tools. And NVIDIA just bought a big stake in the company, even though both firms have been working together for years. So this partnership, this collaboration, this press release, most of it is not new. CEO Jensen Huang told CNBC this morning that Wall Street has been focused on tracking AI spending from tech companies like OpenAI, Anthropic, Google. But he says investors are really missing the bigger picture. Traditional industrial companies are about to massively ramp up their spending on engineering software and computing power. Here's his pitch. Listen in.
And the percentage of R&D they invest in automation, in software, etc., is going to become exponential, driven by the complexity and the sophistication of what they're building. So if they were spending 2% of their revenue in R&D dedicated to the software automation and the technology, is going to get significantly higher.
Point out. That's Synopsys CEO. And what he's saying is that companies like GM, Siemens, major manufacturers need more computing power as their products get more complex. And by investing in Synopsys, which already works with all of these companies, NVIDIA is essentially positioning itself to capture that spending at a time when the market is, of course, worried about hyperscaler spending, AI bubbles, et cetera. It's basically NVIDIA and Synopsys saying our market isn't just AI data centers. It's every company that designs complicated products, Kelly.
I understand. And again, why does NVIDIA shouldn't they just be a beneficiary of the fact that all these other industries are going to use AI and therefore boost their business? Why do they need to invest directly?
Because this is another way to integrate software. This is all about NVIDIA integrating its CUDA software further into the stack. So you have Synopsys that provides the engineers with the design tools to build said chips. And now Synopsys is going to integrate CUDA, NVIDIA's software, further into its tools, which means that NVIDIA will be able to further influence customers down the road that may not use certain NVIDIA products. So it's just a way of NVIDIA expanding its partnership. And NVIDIA actually announced a similar type deal back in March with Cadence, who is a competitor to Synopsys. I did ask Jensen Huang this on a press call about, at 10 a.m. Eastern time, specifically about regulatory concerns. And he said that none of this is exclusive, that Synopsys can work with Intel, AMD, et cetera. We're working with Cadence, other companies, et cetera, and that there should be no regulatory concerns because we're not forcing Synopsys to buy chips, even though Synopsys does buy chips.
Joining us now.
Okay. There we go. Amit, jump on. Let's talk some Robinhood. I sent you out a link. Jerome Powell is live? No, it should be at 7 or 8 p.m., right? I don't think he's live. If he is, where is he live? Okay. Jump on the Beyond Meat train. The Beyond Meat train is up randomly. We were following the markets. This was not one of the top movers, now up 23%. Just crazy. Yeah, 8 p.m. Eastern Standard Time. Okay, cool. Jerome Powell isn't life. I got fooled. My bad. No problem, man. Give him a ban. He's got to learn his lesson, okay? Manslaughter doesn't mean you meant to do it, but you still have to pay for those consequences. See you later. Okay. Levitt is live. Yeah, I'm not worried about that. No, don't ban him. I'm joking. What are we buying today? Well, personally, I'm going to be dabbling in a little bit of BMNR. Got to catch a little bit of the dip. Even though I've been catching dips for months now. It's never felt good. Okay? Nothing like this has felt good. Sharplink Gaming, under $10. It's just, I'm crying inside. We're doubling down, but the Ethereum thesis for me has not changed. Who knows? We're keeping it a speculative position. But then, maybe I need to talk more, buy more of Robinhood, because one of the greats, Amit Kukreja, is also into this name. Amit!
Dude.
What do you think about that intro? I kind of butchered it.
It was fine, but I think people completely are misunderstanding the prediction markets industry. I really do, dude. I've spent a lot of time over the past couple of days looking at this industry, understanding the market dynamics. I really think Vlad is seeing a much bigger opportunity here than everyone else thinks. And I've come to the conclusion that I really don't think this is similar to gambling. And I'm going to work on a Substack on this later in the week to kind of present a lot of the research. But at its core, if you think prediction markets are gambling, you think options are gambling. So if you buy a 195 call on Nvidia expiring this week, that means Nvidia needs to be at 195 by this Friday. If it's not, you lose everything. That is a binary outcome. Same thing with prediction markets. If you're betting on the Lakers winning, the Lakers better win. Now, let's say the Lakers are going against a shitty team like they were going against yesterday, the New Orleans Pelicans. The prediction markets had it priced 92% to 8%, which means if you're buying a contract at 92 cents, you had 8 cents of upside, right? So not the best amount of upside, but nonetheless, the market was pretty certain that they were going to win, and they blew them out by like 30 points. The option for Nvidia at 195 is priced by the market makers based on the context of if the market collectively thinks, based on the Synopsys update and everything else that's going on in the AI ecosystem, if Nvidia will get to 195. It's just pricing the risk. And then let's say you buy the Nvidia contract today and tomorrow it runs up to 191, but you're afraid that it won't get to 195 by Friday. Guess what? You can sell the contract for a profit because you bought it today at 178. You can sell it tomorrow at 190 if it has a big move. And then you avoid all the theta decay that comes by Friday if it doesn't get above 195. You can do the same thing on a prediction market. You can buy it low, sell it high, intraday or intra swing of the event without having to wait for the outcome. So I think everyone criticizing prediction markets is misunderstanding the pricing of risk, the TAM around that. CBS did a really good special on Polymarket last night that also helped me change my perspective on it. And I think Vlad recognizes this is going to be one of the biggest industries ever, which is why they're taking it so seriously.
Yeah, what do you say about the people who also just think that, you know, the buying of options might also be just gambling because it does have an expiry? Like, I don't know.
Well, okay, so
they
can think that. No, they can think that, but their claim is that Robinhood is promoting gambling. Well, then so is SoFi, so is Schwab, so is
Right.
Fidelity. So the argument is bullshit. Like it's just like the argument doesn't make any sense. You cannot say that this is gambling and then you get upset at Robinhood for promoting it. Robinhood's just taking advantage of the market opportunity and building really good tech around it. But so are the other brokers when it comes to when it comes to options. By the way, guess who was one of the first investors in Kalshi? Charles Schwab himself. So what are we talking about here? That this is a Robinhood thing, you know? Like I just don't think it makes. I think the unethical argument is being touted by people that just hate Hood. I don't think they have an actual argument to make because then you would say options are unethical, which obviously they're not.
Yeah, no, I don't think that they're unethical. I think that if someone can have an advantage, doesn't mean that everyone that is participating does have an advantage, but you can have an advantage in prediction markets. That means that if you studied, like, you could have a higher win percent than 50%. I think that those should be on a brokerage-like platform. It doesn't mean that I have to participate, but that should be open to investors the same way that crypto is.
No, I agree. And also, here's another reason I don't think it's gambling. And this is, something I've been thinking about over the past couple of days. There's no house in a prediction market. There is no house always wins. There's me and Tanner betting against each other on a certain outcome. If I win, I take Tanner's money. If he wins, he takes my money. There's market makers that are providing liquidity. But with DraftKings, FanDuel, like there's a house, they have a built-in VIG. If you get too good, and this has been chronicled so many times across really good sports bettors, they will ban you. They will, because you can't keep taking the house's money. And the house tends to win because they have a structural advantage. In this case, you're right about the pricing of information having an edge. If you're like a big Lakers fan and you understand, the Lakers better than a lot of other people, you have probably some level of analysis there that can help you make a prediction. But if you lose, you're losing money to someone else. If you win, you're taking it's like a stock.
Yeah. Yeah.
So I just think this is becoming so clear to me. And the growth then, the thing we saw today, 3 billion contracts. I mean, if this thing keeps compounding anywhere near 20% month over month, which is probably not sustainable, but even if it's at like 5% month over month, I just think this is going to be a massive market. And I think eventually every brokerage will have to accept it because the pricing of every single event at every single moment is going to be necessary for all financial transactions. And all financial institutions are going to want that data. And so I think every financial institution will try to participate in that entire industry.
No, dude, I've been thinking about that more, like Kalshi as a news source almost. And I'm surprised that whenever I'm on Google and I try to type up like, oh, what's the chances of like who's going to be the next Fed chair or something, that Kalshi or Polymarket is not one of the first things as being a news source. That like those are the real odds. It doesn't mean that what has the highest percent is going to get in, but the chances are very high. We've sort of been already proven in prediction markets that the accuracy is insanely high. So is there a better news source going to Kalshi or Polymarket rather than going to Reuters and some of these other things, New York Times, stuff like this, that have been proven wrong over and over and over? Like, I think that these should be looked at not just from, oh, you can take a side here, but no, look at what other people are taking sides on. Like, use this as an information source. it's pretty accurate. You get a lot of information that way. I'm just surprised that it's not like the first thing that comes up whenever I'm asking on Google. Maybe there needs to be some partnerships. Maybe Google is waiting for them to see some sort of large contract there, but I'm surprised that's not front and center.
I think it will be. I think Google announced a partnership with Polymarket for their financial API. I think Yahoo announced it as well. Like,
yeah, on Google Finance, but
not on the actual search. Got you.
Yeah, I want it on the search. Like, it should be a news source. Like, no buy button or anything. Just tell me what the odds are. You know?
No, I think you're right. And like prediction markets have gotten it right way more than they've gotten it wrong. Because I think the argument here is that when there's money on the line, people have a very strong incentive to look. Like the French whale who put 80 million on Trump to win
Yep.
the election, apparently he wasn't doing polls. He was hiring people to call people and ask them not who you're going to vote for, but who do you think your neighbor is going to vote for.
Yeah.
And like he obviously went out of his way because he had $80 million on the line to figure out if Trump was going to win. But it gets you to a closer source of truth, and that's where I think Robin is going to really take advantage of that. Also, their fourth event in less than a year is crazy, bro. So I think that's going to be exciting.
Dude, they didn't talk about, honestly, this is how fast they moved though, right? They said that was going to be an AI event. And then in the last 2 months since the last event, they're like, oh my God, prediction markets is turning into what could be one of our largest segments of our business. Let's turn this next event into a prediction markets / AI event.
That's crazy.
They named it
so crazy.
/ no. Like, it's probably going to be primarily a prediction markets thing. They just probably wanted to also make sure that they were going to talk about AI because they had kind of promised that at their last event.
Well, I think they're seeing how much money they're making off of it, and they're like, "Holy, like we have to elevate this on the priorities right now." And they have a lot to do to build out the experience. Like Polymarket and Kalshi have a lot more. Just like even there's no desktop version. Like, how's there not a desktop version on Hood to see the probabilities, even if you don't have a Hood account? Right? Like there's so much.
There's no Robinhood legend for prediction markets yet.
Yeah, like dude, if they could focus on prediction markets over the social stuff, please, like there are so many more things to put. So I just think Vlad is realizing this is something they have to take very seriously. And I think the stake they made with Susquehanna last week kind of proves how much demand they're getting because they need more liquidity. And you really need good liquidity because if you don't have good liquidity, people aren't going to trade. So the fact that they're ensuring that is in place.
We didn't really talk about that. What do you think about the whole Ledger X thing? I mean, I'm doing a little bit of a victory lap here. I knew that they were going to. They're not going to be stuck with this third-party risk of just relying purely on Kalshi or even Polymarket to some extent. Like, they've always built things in-house. Do you think that Ledger X was the perfect partner, or how do you see it?
Yeah, I mean, again, I've really been doing a deep dive on this. So Susquehanna has been in the sports business for a while. They have a Ireland-based subsidiary called like Neil Analytics, and they have a lot of different market-making activities. They're actually the market maker for Kalshi as well. So I think they realize that Hood's bringing a lot of volume to Kalshi. So maybe they're both thinking, hey, why don't we just like kind of get rid of Kalshi? And again, I don't think they're going to get rid of them anytime soon, but that subsidiary that can handle the liquidity itself, I think is super important. Because right now the prediction market contracts are 2 cents a piece because one goes to Kalshi, one goes to Hood. If Hood could just make that 1 cent and keep all of it, I mean, for users, it would be a way better experience because taking 2 cents off your trade is like that eats into your profit margin. But number two is that if you have Susquehanna directly working with Hood to provide liquidity, not just through Kalshi's market making, I think that just means better spreads and better fills. And so if Hood can give more distribution, more volume, Susquehanna can make sure that the fills are more legit. Like, I think it's a game changer. Way better take rates, like way better user experience. I think 2026, if crypto goes down and Hood's going to lose a lot of money off not being able to monetize crypto like they did last year, this is where they pick up. Like this is why you and me have been so excited about Hood, because like we've both been concerned about crypto winter and maybe it's happening, maybe it's not. But if it does, sports are still going to be around, and Hood finds a way to make money somehow.
Man, I've been doing a lot of looking into culture in companies and trying to use that as a strategy to find like sort of the next great businesses. And one thing that I keep coming across for Robinhood is like just how much of a high trust organization this is. Everyone is left to like one, I find it incredibly amazing that each individual product, like like prediction markets or options or equities or futures. They're all different teams, but yet the quality that they release those products on are all very similar. They're all, top of the line, amazing products that people were willing to switch their brokerages for. And yet Vlad, for the most part, whenever new products get rolled out, he goes, yeah, no, I saw it. It looks great. Like he's not been micromanaging this. He's just has high trust in that business. Do you think that is, one, scalable, but also two, their real competitive advantage, that they can just continue to move much faster than their competitor? I'm kind of leading the question because it's what I believe, but that they can continue to lead in any new market, any new vertical, and that they're going to continue to grow because they're moving much faster.
Yeah, I mean, I think that has to be like one of the core moats.
What is their moat for you?
Well, I mean, I've said this for a couple of years, but I think the user experience has always been the moat. I think like using their platform is something that's so sticky that it's hard to kind of leave to another broker. I mean, you just see it all the time with so many people say that, I hate that Hood doesn't do this, they don't do this, but it's hard for me to leave because I just love using the product. So they've gotten a lot better. I mean, introducing tax lots last year was a big deal, and that was like a very basic feature that they didn't have for years. So I think now that also like momentum creates momentum. So now they're seeing the stock go up, they're seeing the market cap expand, they're seeing the validation by the equity markets, S&P 500. So now they know they kind of have to live up to the hype. And boy, have they lived up to it this year with the amount of releases. And I think Vlad just wants to keep that going, regardless of if it's a bull year or a bear year. If the product updates keep coming out and the market can see the trajectory of how that eventually inflects into earnings growth, like it really doesn't matter if the stock goes up or down next year, because long term, all of that is going to compound. So yeah, I think they just move fast. They really, really just move fast. And Vlad's ruthless. I don't think he cares about a lot of the opinions that people have around what they're doing. I think he has a strategy. He trusts himself. He'll listen to some of the criticism, but I don't think he's going to capitulate to all these people tweeting 1993 studies about gambling being addiction. It's like, no, like that's not changing the size of the opportunity of this TAM.
Right.
And as a result, he's going to go after it aggressively.
Beyond Meat, by the way, is up 31% right now.
Yeah. So like, how is that not gambling?
It
is buying Beyond Meat. Okay, so like what are we talking about here? Like, so Schwab shouldn't let you buy Beyond Meat?
Well, I agree. Like SoFi, like no one cares about day traders. They just go, oh, it's part of the market. It's high risk. But then prediction markets is something like people treat it completely differently.
I think this is what I've been seeing in my research as well. I think people they have such a negative, and I get it. Like I understand, like I've never been like a gambler. I don't come from a gambling family or anything like, but there are people who have seen their family get into deep depression and stuff by getting into, being at the casino all the time. And I was like, and by the way, Steve Cohen just got a casino approved in New York, ironically. Yeah. So, I mean, like, I understand the sentiment, but the sentiment does not deny that these markets are going to be incredibly important as a financial piece of data, and that they are essentially the same thing as buying Beyond Meat. In fact, I'd rather trade a prediction market than buy Beyond Meat. And if I could do both on Robinhood, then that becomes a financial super app. So I understand the sentiment, hatred towards it, but the product is growing, and as long as people care about using the product, that's really what matters here.
Matt Money said in chat, if we had the opportunity to get a private placement in Kalshi, would you take share in other prediction market names?
I don't know. I don't know anything about Kalshi outside of the fact that they were one of the first two to this market. I don't know if the first mover advantage is going to be enough to, I actually, dude, before Kalshi, actually, I was on the phone with Tarek, the CEO of Kalshi, back in like early 2024, because we were trying to do a podcast and he was trying to get some attention, like just like people didn't care about Kalshi, all this stuff. And at the time I understood it, and I didn't really get what he was doing, but I, kind of understood. And then we did one interview back in May of last year. But like, it's one of those things where it's just easily, like if SoFi wanted to, they probably won't, but they could launch their prediction markets tomorrow. I mean, like it's at the end of the day, you just go through all the regulatory bodies, and then you have to get distribution to get people to trade, which is what Robinhood has. So I don't know if I would buy Kalshi at 11 billion. I just don't know if this is like the next $100 billion company. I think it's probably worth more than 11 billion eventually. But then I wonder if they get stripped out of a lot of their users and distribution, like does that valuation hold up? Although I still think there's a very heavy cult base of users that just love using Kalshi and they're never going to leave. So I probably wouldn't buy it. I just buy more hood, but I understand why people are buying it.
Yeah. Chime up 7% as well. I wouldn't touch Kalshi, by the way. I honestly think hood is just going to take so much of the market share. I think like there can be some great early movers and some people that have sort of pioneered the product, but I don't think that guarantees you the market share going forward just because you have it today. So I'm honestly in a sort of space in my investing career where if Robinhood is going against you or trying to take your total addressable market, I wouldn't fight that. Don't fight the Fed. Don't fight Vlad.
No, I agree. And also, what are you really buying when you're buying Kalshi? Like you're buying one of the top 2 prediction markets, but that's it. Like I don't think there's anything else to the business. With hood, you're buying a billion different products, 10 of them that are doing 100 million each. So yeah, I think it's definitely.
And why spread your money around? Why trust another company? Like your money's already at hood.
Especially a company that has already had a lot of shady marketing practice. You know, it's like there's already all this shit that they have to deal with. Yeah, I agree. I just rather go with hood.
Okay. I don't want to keep too much of your time. Is there anything else that I need to look out for? What's hot?
No, not really. Just is Nvidia up? Oh, why is Nebius up so much today, bro? All the data center plays.
They got an upgrade to 211 from 184 from a REIT Holdings, I think.
Dude, I'm starting to love this company. I'm happy you and I are in this. I like this one.
Yeah.
Like
Dude, I wish, honestly, to some degree, you know what's crazy is I'm like, I wish I didn't have such a high holding in NVIDIA so I could buy more. I know that's such a silly thing, but I'm like, I can't believe I'm not going to take advantage of this dip, but this is ridiculous. NVIDIA at one in the 170s, I'm just like, did people not see the last quarter? Like,
I think Jensen kind of laid out his thoughts today on CNBC, and he was just like, bro, we get it. ASICs are cool, but like, we're Nvidia. We're doing 65 billion in revenue. We're probably going to beat that number next quarter. You know, so it's like,
yeah, I think he's honestly, or where the problem that they're having is a hard to understand business. It's definitely not easy to understand, but it still is extremely important. So a bunch of people, anytime that they see a shiny new object in this market, they're just running towards it, even though, in my opinion, the bigger is just going to get bigger here. NVIDIA, all the big tech hyperscalers, like those are the names that I want to be involved in right now.
last week, I started really thinking about NVIDIA and Google and this TPU thing, and I just started like really questioning myself on NVIDIA and like really, like I think I took a couple hours to just like sit and think about the investment and look at the multiples. And I'm sleeping like a baby with NVIDIA. Like I've really concluded that the market just doesn't want to give them the premium, and we're not even talking about a premium, 25 times there. The market just doesn't want to get. They're so afraid that Burry is right. You got all these people selling newsletter subscriptions because they're proclaiming the death of Nvidia, and you got all this stuff floating around. And maybe they're right, but I think the market just continuously needs a little bit more evidence. And to be fair, Nvidia's up 30% this year, $4 trillion company, so I get it. But I agree with you. When you take the emotions out of it, and you just look at the multiples, you can sleep like a baby. Like even if you're concerned about Google TPUs, it's okay. Like, all right, well the market's discounted that. Do they need to discount it another 30%? Maybe not. And if Nvidia beats expectations, guess what? That 10-15% it lost from the TPU thing, that's coming right back.
Yeah.
So,
dude, I'm not there's a whole bunch of people that are like, oh, look how many companies are trying to reduce reliance on Nvidia. It's like just because they want to doesn't mean that they can. So the reason why their gross margins are high is because they know that they can get away with it, not because their customers love paying high prices. It's because there's nowhere else to go. Okay. And like another thing that I've been recently saying is if I was looking at the financial industry and I saw Upstart trying to go all in on artificial intelligence, but no one else in the industry is saying that that's appropriate for underwriting. It's like, okay, well, that could be a big opportunity, but most likely they're just the odd ones out. Okay. And that it's probably just not the most useful use case of artificial intelligence. Whereas what's happening from big tech and all the advertising players and logistics and everything like this, every single name from Jeff Bezos to Elon Musk to Jensen Huang to Mark Zuckerberg, Sundar Pichai, every single person is saying AI is the thing. Compute is a constraint. We need to get more. every time that we get another GPU online, our AI models get smarter. Like, there's not a single outlier that's saying, no, this isn't the case. Actually, there is one. Apple's research team came out and said reasoning might not be as real as people think, and everyone just laughed at them. Okay. The whole world believes that AI is the way to go, and the way to do that is to buy more chips. It's just like, it's getting no premium. It's driving me insane, man. I don't know.
Look, I agree, and I think people feel that all these AI leaders have come up with the greatest conspiracy of all time, and they're just pumping their bags. And it's like, all right, you could have that view, or you could just have the view that the market's a little afraid that it might be a little frothy, and that's fine. But over time, if the earnings growth continues, then money will find where the earnings is. And I think that's Nvidia. That's why I bought more last week at 170. If we go back below 170, I'm buying more. Like, this is not the time to get scared of the
But the
story.
greatest conspiracy, like I would even see that if someone said this about Palantir, like if everyone said, oh, this is the next best thing, I'd be like, yeah, but I haven't felt and used it, so it's hard for me to wrap my brain around it. Everyone has used some form of artificial intelligence, and it's all blown away our expectations. It's by far the most powerful tool we've all used, and yet somehow we think, oh, it's not going to get better, even though it leapfrogs in performance every 3 months. Like, is there no forward-looking belief to say that this is going to continue to get better?
And the best is yet to come. We haven't even really cracked self-driving or robotics at scale.
Yeah,
So-
didn't Cactus Jack, I think today, just said there's something like 308, or Morgan Stanley said, but Cactus Jack sent it. $300+ billion of humanoid chips expected by 2045 or something like this. That's probably a very, very low estimate.
Yeah, I mean, look, again, like, and we can speculate all we want about where the chips are going to be used, but we're seeing the earnings on not just Nvidia, but all of them, including AMD, Micron, Marvell. Like, people are buying the chip. Now, if they're all buying the chips to stockpile and use them in these data centers that are eventually going to be ghost towns soon, then all right, I guess we'll see. But feels very unlikely given how much demand is outstripping supply. So
Beyond Meat up 41% now.
there you go. That's I mean, well, someone made 40% on their money today by saying, yes, I think Beyond Meat deserves to be up 40%. Someone sold them those shares. That to me sounds like a prediction market around Beyond Meat's stock price.
Yeah. Yeah. Is that like your grinder profile description? You're looking for Beyond Meat?
That's a good one. That's a good one. All right, that's my cue to leave, but that's a good one. That's a good one.
Good to see you, brother.
Good to see you. Later.
Ladies and gentlemen, if you guys don't know where you can find Amit, I'll put his links in the chat, and we will transition to talking about more SoFi and stuff like this. Yeah, thanks for having me, or thanks for coming on, Amit. Jeez. Okay, here's his YouTube. Check him out. If you guys aren't already following Amit, and I'll also throw his X up there as well. Okay. Let's go ahead and let me find his X here. I don't know how he does it. He's such a good multitasker. I can't do this crap. Okay. The powerful duo. Well, I'm glad you guys liked the line. I thought it was funny too. Beyond Meat up 41%. Why are you guys listening to me? I'm trying to get you guys to look at Meta and Nvidia and Amazon, and all this stuff is down. You know, there's no fun in these names. We should have been talking about Beyond Meat. Bro didn't even know we are from Amit's channel. I'm fully aware. Trust me. I hear it every day. But still, if there is a percentage of you guys that aren't following Amit, I'd like to pay him back to some degree. I know, obviously, what I can do for his channel is much smaller than what he can do for mine. But still, if I can give back any percentage of what he's given to me, I'd like to. Bro, Tanner, I saw your live streams first before Amit's. Boom! Thank you, Bob. Appreciate that. Let's see. I sense bromance. Well, I appreciate you guys saying bromance because the earlier allegations was romance. I get caught up in Amit's allegations. Him showing 1,000 pictures of just female friends. Never beating the allegations he is. Okay. I found Tanner before Amit. Well, there we go. Cool. Look at this. We're pushing even higher. 44%. Do you guys like Beyond Meat? Like, I'm not just talking about the short squeeze, but do you guys even like their products? Because I can't buy into something if I don't actually like the underlying thing. Is prediction markets also a workaround for states that don't allow gambling like Alabama? Yes, it is. DraftKings has also talked about how they want to use prediction markets to expand into the states that they aren't in currently. At least you read the super chats. Amit just takes my money for his grinder subs. Okay. I think he does read out all of his things, except it's at the end of the streams. Yeah. You're my white Amit. I mean, I'll take it. Why can't he be like, brown Tanner? You know what? Erase this from the VODs. Why do I gotta be white Amit? Okay. Because he's not brown. He definitely is brown. He's an Indian man. Excuse me. Yeah, if you guys start calling Amit brown Tanner, I think that'll go over well. That is racist. I don't think you know what racist means. Chris can be brown Steve. every member that goes on to Amit's stream is Steve, Asian Steve, and brown Steve. How do you say his last name? Kukreja? I think that's how you say it. That's how I say it. I could be wrong, but no one's ever... He hasn't corrected me, so I don't know. How is anyone supposed to learn in this life? You guys make it out to be like, if you even remotely refer to someone that, like, if he's from, or his family's from India or something, that is racist. That I somehow think that my race is superior to his, because I even remotely mentioned that he's brown. Get out of here. Are you Asian Steve? No, Jason is Asian Steve. I don't know, Caucasian Steve, I guess. I'm even more white than Steve. So you guys can probably say I'm white Steve. Oh, Canadian Steve. Yes, you're right. I am Canadian Steve. Slim Steve? No, Steve is slim. However, whenever we were doing those, oh man, if you guys remember those AI pictures of Steve and Amit, I was making these photos online of, Steve carrying Amit to his car because they were having this bromance dinner and didn't invite me. So, I live in a different country, but still. Those ChatGPT did him so dirty. I can't even describe to you how fat they made Steve in those images. It was beyond funny. So I'm trying to look for them, but I found them. So Amit ended up posting this. I took this image and said, make Steve and Amit. This was, back whenever the models were a little bit worse. So it made Steve a little chunky. But then I was like, okay, well, that's not really a New York setting. Like they're in Manhattan, they're downtown Manhattan. So please put them in New York. And they blew Steve up. Oh my gosh. But yeah, fun times. AI can be a great time. All right. We have fun. Beyond Meat up 41.5%. Is this where we end out the day? What a short squeeze, by the way. That is a short squeeze. Yeah, use Nano Banana this time. I'm going to have to switch. Chunky chip cookie. That is the funniest quote. Oh my God, that's so good. Chunky chip. I don't know how so much personality comes through that one comment. That's so funny to me. Chunky chip cookie. And Steve stumbles over to get his cookies and milk. He's gonna beat the shit out of me. Oh God. Yeah, Bitmine's still down 11.8. Strategy starting to recover though. We started the day at 167, down to 155, back up to 163. Venture Global down 7%. This thing cannot catch a break. Above 7, back below 7, 693. Bitcoin down 6.2%, and Strategy even lower than that. So furthering to lower their market net asset value multiple. Actually, I got to wrap up this stream. I got to go. I need to make a BMNR video for you guys. This has been, there's been a lot of like the updates on BMNR, the prices, the MNAV. We're still above MNAV, so there's nothing too crazy. But, and I don't quite have it where I should honestly record the videos right here and just take this clip and then make a YouTube video out of it. But I'm, yeah. Thank you guys so much. I think hopefully the market does. Yeah. Oh my gosh. Actually, we have not been following this. Wait. I'm not leaving. Hold on. The market's dying. What is happening here? Let's quickly find out what's happening to the market, and then I will take off. Quick report or a quick tweet just came out saying 2026 is shaping up to be the year of prediction markets. Became fully regulated in the United States, get integrated into Robinhood. Robinhood, $10+ billion months are coming, and Vlad commented on it with just like an emoji. We'll see. I'm not seeing anything right now. Lyft says its new AI support system built with AWS and Anthropic is now handling driver and rider issues as well, cutting average resolution times by 87%, with over half the cases resolved in under 3 minutes, and driver usage up 70% in 2025. For the first time since 2021, the average price of gas in the United States is down to $3 a gallon. President Trump continues to state that he wants gas prices back below $2 a gallon. Yeah. A little bit hard to invest in some of those energy names whenever you know that that's the hope by the administration. You know, very hard. Okay. All right. I'm actually not seeing anything. Do you guys see anything right now? Best prediction market company to invest in? I personally, just based on my own investment, would say Robinhood. But that's just me. The market is dying. Why is this? The market is dropping. No. Okay. I thought you were giving me a real answer. The next dude, Jeremy Lefebvre is just selling all of his Teslas. Crazy. He's going all in on the anti Tesla trade, literally getting rid of the cars. I don't agree with him there. I think that the stock might be, expensive, but the cars are still unbelievably good. I like the product. The market dies every other week. The market's dying every day. And every day we see some sort of, amazing day, crash, amazing day. Well, I know that he just ordered a new Model X. Well, he's selling his I didn't know that part. So maybe he's happy with Teslas, but he just sold his Model X to Graham Stephan supposedly, and now he's selling his Tesla S Plaid. So, yeah. Okay. I'm not seeing anything right now that's standing out to me. Any scary news? So I need to go record this BMNR video. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now. Make sure you subscribe. Only if you want.